Welcome back to the channel. Don't forget to subscribe.
Where does your money go? Every month, millions of people deposit their salary into a bank. But have you ever stopped to ask what really happens to that money after it reaches your account? Most people believe their money simply sits inside a bank, waiting safely until they decide to spend it. It sounds logical, but the real story is far more interesting. Banks don't become profitable by storing your money. They become profitable by putting money to work. In the next few minutes, you'll discover how banks really make money and why understanding this can make you smarter with your own finances. You deposit your money. Let's start with something simple. Imagine today is payday. Your salary of $1,000 arrives in your bank account. At first, it feels like your money is simply waiting for you inside the bank. But in reality, your deposit immediately becomes part of the bank's available funds. That doesn't mean your money disappears. Your account balance still shows exactly what you own. Instead, the bank carefully manages deposits to support loans, payments, and other banking services, while keeping enough funds available for customers. Banks give loans. Now, here's where things get interesting. Banks don't simply hold your money. They use a portion of customer deposits to issue loans. Imagine Sarah wants to open a small bakery, but she doesn't have enough money to buy equipment. She visits her bank and applies for a business loan to turn her idea into reality. After reviewing her application, the bank approves the loan and transfers the funds to her account. Over the next few years, Sarah repays the loan with interest. That interest is one of the main ways banks earn money. What happens next? Let's say you deposit $1,000 into your bank account. What happens next? Your account still shows $1,000, but inside the banking system, that money is now helping support many financial activities. This is possible because banks carefully manage deposits while keeping enough money available for customers who want to withdraw cash. The real profit comes from the difference between what banks earn on loans and what they pay to depositors. That difference, combined with banking services, helps banks generate revenue while supporting the economy. Let's break it down with a simple example that anyone can understand. Now imagine the bank uses part of those deposits to approve a business loan. The borrower agrees to repay the loan over time, plus interest. That interest is one of the biggest sources of income for commercial banks. But loans aren't the only way banks earn money. Every swipe matters. Every time you use your debit or credit card, the bank becomes part of that transaction. The merchant receives payment, and the bank may earn a small fee for processing the transaction. Millions of these small transactions happen every day, adding up to a significant source of revenue. Banks also earn money from account maintenance, overdraft charges, and other service fees. Individually, these fees may seem small, but across millions of customers, they become a major source of income. Credit cards equals major income. Credit cards are another powerful way banks generate revenue. If the balance isn't paid in full, interest begins to build month after month. The longer the balance remains unpaid, the more interest the bank earns. That's why paying your credit card in full every month can save you a lot of money. Understanding how banks earn money helps you make better financial decisions every single day. 3 costly money mistakes. Now let's look at 3 common mistakes that quietly help banks earn even more money from you. Mistake number 1. Paying only the minimum amount on your credit card. It may feel like you're saving money today, but you'll often pay much more in interest over time. A smarter habit is paying your full balance whenever possible. Mistake number 2. Ignoring bank fees because they seem too small to matter. Mistake number 3. Keeping your savings in an account that earns almost nothing. If your money grows slower than inflation, your purchasing power quietly shrinks over time. The good news? A few smart habits can help you keep more of your own money. Banks are not your enemy. They provide valuable financial services. The key is understanding how the system works, so you can make informed decisions. The more you understand where your money goes, the better you'll be at making it work for you instead of against you. Let's quickly put everything together with one simple example. Your money isn't disappearing. It's becoming part of a financial system that keeps businesses and everyday transactions moving. The more you understand this system, the better financial decisions you'll make. Remember, banks are businesses. Understanding how they operate helps you become a smarter customer. Now you know one of the biggest secrets behind modern banking. Every deposit, every payment, and every loan is connected through one financial system. Understanding how this system works gives you an advantage that most people never think about. The smartest people don't avoid banks. They simply understand how to use them wisely. When you understand where your money goes, you start making better financial decisions every single day. And that's exactly how banks actually make money from you. The next time your salary arrives, you'll know that your money isn't just sitting in a bank. It's becoming part of a much bigger financial system. And once you understand how the system works, you're far less likely to make expensive financial mistakes. Small financial decisions made today can save or cost you thousands over the years. If you enjoyed this breakdown, there are many more hidden money secrets waiting to be uncovered. I'm Alex, and this is Finance with Alex. Thanks for watching, and I'll see you in the next video. Subscribe for more videos.